Chapter 16, we are going to talk about accounting for state and local governments. So governmental accounting is very different than for-profit businesses, corporations. So with a corporation, we're following generally accepted accounting principles. We follow the different procedures such as matching, where we try to match the revenues to the expenses that we match those expenses to the revenues that created the expenses so that we can determine net income. Also in a for-profit business, their motive is to make money and then to send it back, to their shareholders, either in the form of their stock prices going up or given dividends. And of course, for-profit companies will pay tax. So government obviously does not have any of those same purposes. So they do not have a profit motive. Their primary purpose is to provide services to help attain public policy goals, and they're serving basically whoever's in their community, again, because we'll talk about state, local, and federal government. So obviously if you're like a local, it's just who lives within your city limits. If you're state, who lives within the state. Federal government obviously has a much larger, broader scope. And then government is going to last, like you figure with a business, businesses can go under, businesses can get acquired, or merge in with other businesses. Our governments are not going to do that. They're going to last for a long time because, again, as long as there's people living within those communities, that government's going to continue to exist. So again, government agencies or organizations do not follow FASB, they follow GASB. So the Governmental Accounting Standards Board is the acronym is GASB. So they have three basic users of governmental accounting information: the reports that are prepared, the citizens of the whatever state, local, federal government can look at those financial statements. Any legislative or oversight bodies, people who are monitoring them, and then if they are seeking money. So we'll see that government, they'll issue bonds. So you can have state, local, and federal bonds, and that's a way that governments can raise money. But if people are going to invest in those bonds, they may want to see the financial statements. So we have two separate types of financial statements. So we have fund. So in governmental accounting, everything is kind of fund based. So we have fund financial statements that will show the restrictions of the resources and then report current revenues and expenditures from various activities. Then we have government-wide financial statements that report all of the revenues and costs with more of a long-term focus. So again, it depends on what you're looking at those statements for, which one is more meaningful. So our fund financial statements are individual government activities, and they're going to focus on like their current financial resources. So that'd be, again, if it's something current in that current year, it's really probably just cash and receivables. There'd be no like long-term type investments included in those. And they'll assess the fiscal accountability in that agency being able to raise the money, and then how do they spend that money. And then the revenues, if they result from current financial resources and they're available to be used, we would record those. Expenditures will be recorded when they reduce the current financial resources. The government-wide financial statements, again, are more bigger picture. They report on the financial affairs as a whole, and they are looking at the governmental agency's operational accountability to basically determine what is their overall financial position, what type of cost of services do they have, how are those programs financed, and then the extent to which the government has invested its capital assets. And they would use accrual-based accounting, which would be the same as what corporations do. So here again is a comparison of those two. So the fund is more individual activity-based, government-wide is that bigger picture as a whole. The fund is focused on our current resources. Government-wide is all economic resources. The fund is inflows and outflows, again, of those current financial resources. Government-wide is like the overall financial health. Fund financial statements uses modified accrual-based accounting. So again, that's a little bit different than what the corporations use. And then government-wide uses accrual, which would be the same. So when we're actually inside the fund accounting and we're recording our activities, again, there can be a different variety of activities that are happening throughout that government agency, and the accounting for each of those activities is maintained in a separate fund. So it could be for like the school system, could be for road construction, could be for if they have bonds payable. So every separate activity, if they have their own water department, like all those things are going to have their own separate accounting. We're not going to lump them all together, again, because they are very distinct. So the classifications are governmental funds, proprietary funds, and fiduciary funds. So government funds are the activities that are carried out for a purpose to provide citizens with services through taxes and other general revenue sources. The proprietary funds are like activities that would be considered similar to a for-profit. So like I said, if they have a water department, like they're charging the consumers for the use of the water, those revenues are going to support the expenses. If they have a public pool, they're charging people membership fees. Those membership fees are going to cover the expenses of that public pool. So those are examples of like proprietary funds. Fiduciary funds are monies that are held in the government. And then, again, we have these different types of governmental funds. So these were categories or classifications. Now we have the different types of funds. So we have general funds, special revenue funds, capital project funds, debt service funds, and permanent funds. So then we'll talk about each one of those. So our general fund is to account for and report all financial resources that are not accounted for in any other fund. So it's more of the ongoing activities, things that they're paying for that aren't like earmarked for a specific purpose, that type of thing. The special revenue funds are going to be for a specific purpose or a specific project. And maybe that people have made donations that are for that specific purpose. So they give us an example here that the fund was in St. Paul, Minnesota, was used to these are sources. Okay, so the rental income from a ballpark, the administrative fees for charitable gambling, money received from solid waste and recycling. So these are going to be special funds that like money coming into the government from various sources. Capital project funds, those are where we have assigned specific money to build bridges, to build schools, other major overhauls. Maybe we're going to put sidewalks in a neighborhood, something that's kind of major, and we've set money aside from it. or for it, and it'll all happen normally prior to the actual project being started. So they'll have that capital asset. They'll have the money to acquire that capital asset or to construct it. The debt service funds is where we have bonds payable, or the city or the state has borrowed money, and that would be debt to the government. So then there's going to be an account that's going to monitor that debt and the payments that are needed to make on that debt, and those would all come in from that debt service funds. Permanent funds are ones that are restricted by external donors, contracts, or legislation that is going to be earmarked for a specific public program. So they give us, again, another example. Dallas, Texas reported holding $10.3 million in permanent funds to maintain 4 different parks and help finance with other municipal projects. So sometimes these gifts are endowments. So maybe a business could make that endowment. Somebody could have that in their will they want to maintain a public park or something like that. Proprietary funds are where we are charging the users, and hopefully the charges that we are charging cover all the expenses. So those are very much more like a for-profit activity, where we've got revenues, coming in, and then expenses that are hopefully being paid for out of those revenues. So our enterprise funds is going to be financed by user charges. So the activity must be accounted for if any of these conditions are met. So if the revenues are generated by an activity and provide the sole security for that activity's debts, meaning that they don't ask for any other money to help pay those debts off. Laws or regulations require the recovering of that activity's costs through the fees and the charges, and the fees are set to intended to cover costs. So again, I feel like water departments are that way. Like I said, public pools, things like that, where they are charging people. It's a government activity, but they're charging the people the fees, and those fees do go up based on how they expect the expenses to go up. Internal service funds, so they account for an operation that provides services to another department of the government for a fee. So these services are provided for the benefit of the parties within the government, and again, they are similar as for profit. So they give us, again, another example. Lincoln, Nebraska reported 6 operations that were accounted for as separate internal service funds, and that provided a variety of services such as fleet service funds and the police garage fund. So again, you're providing a service to another governmental agency. Fiduciary funds account for assets that are held either in trust or with an agency for basically those monies need to be held separately. Like, they cannot be intermingled with monies that the government is using on their day-to-day operations. So those funds are omitted from the government-wide financial statements, and they would have separate statements included relating to those fiduciary funds. So what type do we have? We have investment trust, a private purpose trust, the pension trust, and then custodial funds. So the pension is a big one because normally most government workers are going to receive a pension. And that is, again, where you get paid your retirement benefits after you retire for as long as you live. So that can be a large amount of money that is going to need to be paid out. And then we can have, again, other, private purpose reasons and other things that do it as well. So our government-wide financial statements, we have two, the statement of net position and the statement of activities, and they are separated into the governmental activities, which is the government funds and most internal service type funds, and then those business type activities. So the enterprise funds and other ones that, again, are more for profit, where we're charging the fees and we're trying to cover expenses. So our statement of net position is going to show all of the assets and the liabilities. So again, similar like to a balance sheet, in that's what we're looking at, is what assets do they have versus what are they owing. GASB also has identified that several balances do not qualify as either assets or liabilities, and these amounts are going to be shown as deferred outflows or deferred inflows. So we've got our capital assets that are being reported, less any related debt. We're going to report any external restrictions on the use of those assets. And then we're also going to report the total unrestricted amount that's available to be used by the government offices just to do their day-to-day bills. So here we have the governmental activities, business type activities, and then we total them out. And then notice we have, again, our assets, our liabilities, but we have those categories that you wouldn't see on a for-profit balance sheet, called the deferred outflows and then the deferred inflows. So those are also listed. And then we come down and we have our net position. So again, think of a balance sheet in corporate America. That would be our equity section. So there is no equity per se in a government. So they're just showing what monies they have restricted, that they have possession of, but they have restricted for capital projects, for debt services, and then how much do they have unrestricted, which again, unrestricted means they could use for their day-to-day operations. Then we have the statement of activities, which again is going to be similar to the income statement. So revenues and expenses, but they will again be separated by the government and then the business type activities. And then they're just saying normally you should read it horizontally and then vertically. So then the next slide gives us an example. So we've got our government activities, our general government, we've got expenses and revenues, and then that would be the net difference between them. So in this first line item, it's a negative, so our revenues are less than our expenses by that 1,800, and then we go down line by line through those. As you notice, all of those are because they're more services that are being provided. Then we get into our business activities, where you notice our revenues are more than our expenses, so we're actually ahead of the game there in money coming in. Then we come down to, well, how do they? So we have all these negatives up above, right? These are all services providing. Well, where are we covering the money for those? So our property taxes are going to cover a lot of those fees. We have investments on our we have earnings on our investments that are going to cover some of those. And then we may transfer from another fund to cover the remaining deficit if we have one. And then at the bottom is just a change in your position. So the structure of the fund financial statements, we have our balance sheet, our statement of revenues and expenses and changes in the fund balance. And then the three categories are revenues, expenses, and other financing sources or uses. So again, the fund are the more specific. So these are the more specific accounts versus the general government-wide ones. So again, the government activities. The fund ones are more internal service funds, The government activities use the economic resources and have a bigger focus, where the funds have the current period focus. And again, the timing is a little bit different. Again, bigger focus with the government wide, and then more current with the fund financial. So then here are the fund financial statements. So we have different types of funds listed through the top. So general fund, library fund, other fund, and then we total them up to the far right. We have our assets, our liabilities, again noting most of these are current things that are going to be used up in the current year. Then we have some deferred inflows, and then we come down to our fund balances, and notice again we list out what is non-spendable, restricted, committed, assigned, and unassigned. And those are all different levels so restricted is earmarked for a specific purpose. Committed is when like your city council commits money to go to a park renovation or something like that. Assigned is when like your VP of finance of that city assigns some of the money to go somewhere else. So it's like a little less formal than the committed. And then unassigned means, again, it could be used. Then we have our statement of revenues and expenditures. So again, same categories up at the top, and then the same total to the right. We have where are the revenues coming from. So property taxes, investment earnings, program revenues, and then what are our expenditures. So then we come down to say, well, what is the excess or the deficiency? So our revenues over our expenses, if it was higher, it would give us a positive number. If it's negative, then it's that deficiency. Then we're going to say, okay, well, what other, so if we look here, we've got, in the general fund, we've got $1,500 extra dollars. So we're going to transfer that $1,300 out to another fund within the government, because again, it's the general fund. It's not restricted in any way. So then that kind of shows you the flow of the cash if there is extra cash, like where did it go? So maybe some of it went into the library program, some of it went into these other funds, and then there's just a change in those balances. And then these again listed out to those different categories that I kind of mentioned that we saw on the statement. And then budgets are very important for governmental accounting because unlike a business budgets to kind of see where they're at, and again compare actuals to what we've planned for, and but most times government, especially local and state governments, they have to operate within that budget. The budget isn't just a guideline. It pretty much sets what they are allowed to spend, and they many times cannot go over it. Like they can't, if it would push them into a negative, or like they don't have the money to cover it, they're not going to be able to do it. So budgets are very important to our government agencies. So then here shows us a journal entry of like if we expect to generate these revenues, and then where are we going to apply them? So it's going to go to salaries, utilities, advertising, supplies, and then those appropriations again become like the budgeted amount that we are able to spend. There can also be purchase commitments that are recorded and like we don't necessarily owe them the money yet, but we are going to set up that encumbrance because we've made the commitment to spend that money. So then when we actually do eventually purchase it, we'll create a liability that will replace that commitment. So then that encumbrance is removed, and then the expenditure is recorded. but we're kind of showing that we owe it or we've committed it somewhere. So for fund-based statements, an entry is required to record the encumbrance, and then an entry is required when we actually receive the goods that we've committed to purchase. And then at the end of the fiscal period, we would remove those commitments. For the government-wide financial statements, we don't record the encumbrance, but we obviously, when we really purchase it, we would make that recording. For capital assets, there's no capital assets within the fund statements because, again, remember we said those are all current revenues and current expenses and just current assets like receivables and supplies and stuff like that. So the fund financial reports, just again, is like what I said, it's just anything expended for that period. So there'd be supplies and prepaids that could go into our fund accounting. And again, they're short-lived. Normally they're going to go through our current assets. And then we do recognize that entire cost as an expenditure, which again would reduce our current financial resources. Now you could use what this is saying, the purchases method is we record them as expenses right when we purchase them. They could choose to use the consumption method where they're going to be recorded as assets when they're required and then charged off to expense as they're used up. Revenue recognition. So revenues such as property taxes, income taxes, and many other types of money that's coming in are going to be different again than really any other thing, different than our not-for-profit for our for-profit, because again, it's not revenue. People aren't paying for services. It's more of like an involuntary type of a transaction. So if I own property, I've got to pay my property taxes. If I work at a company, they're going to withhold the income taxes. So again, it's a little bit different. We're not getting necessarily anything specific out of those property taxes. Not to say it doesn't benefit our schools and those different things, but I'm not like being charged for something I used up. So that's why it's like a non-exchange type of a transaction. So we have 4 different types of those. So derived tax revenues, imposed non-exchange revenues, government mandated non-exchange transactions, and voluntary non-exchange transactions. So then how do governments raise funds? They normally they'll issue bonds out. That's a major source of financing for state and local governments. They have to repay everything that they borrow within that time frame of the bond. It could be 10 years, 15 years. The government-wide financial statements will recognize that cash received and then the debt incurred, again, because it'll be a long-term debt. The fund financial statements would not show the long-term debt because, again, it's more, those are just focused on your current resources. Then we can have special assessments. A lot of times special assessments run through your property taxes. But so those could be for street work, adding curbs, adding sidewalks, sewers and drains, water lines. So say maybe you were in a neighborhood that had well and septic and they're going to put in public sewers and public water. They may assess your property taxes for those charges. And then you would be paying it over time through your property taxes. Interfund transfers is when we're transferring money out of the general fund into other funds. Again, they're always within the government. But again, if the general fund has excess money at the end, it can transfer it to other funds as needed. Okay, so that was our kind of somewhat lengthy chapter on government accounting.